RBC is out with a report on Toronto's condo market, including the dismal state of pre-construction sales. RBC says this market has entered into a deep freeze, with sales plummeting to levels not seen since the global financial crisis. We are joined by the author of that report, Robert Hogue, Assistant Chief Economist at RBC. It's great to see you.
Oh, good afternoon.
So no sign of relief for this moribund condo market in Toronto?
Certainly pre-construction, things are extremely slow. Very few new projects being launched, obviously, when we have significant inventory in the market already of existing homes that are ready to be moved in. And at a time when investors are just not interested in those new projects because the economics just don't work at this point.
Because interest rates are too high and rents have softened, I guess.
Right, and it also indicates expectations. Now we're seeing condo prices coming down, and also that this is affecting kind of any kind of expectations of capital gains in the future,
yeah.
and so with the cash flow not growing as fast as they were just even a year ago. The economics are just not there for investors.
So for people who bought into these condos, I know it's hard to generalize, but they were going to get rental income, but really they were also betting on a capital gain in the price.
Right, and we knew for a while that many of them, those investors were cash flow negatives, and the only rationale for them to continue buying or investing was that they would get capital gains over a number of years, and now they're probably reassessing that expectations. So we would need to have those inventory, like very not lofty inventories. I mean, when you look at the existing homes for sale, they're at decades high right now, and even the number of units that are unsold that are under construction that are nine-year high. So we need those inventories to come down before we start to see some kind that market stabilizing and demand for pre-construction start to pick up in a meaningful manner.
So we're looking active listings north of 15,000 there. Is that a lot, though? Because we're talking about a metro area of 3 million people or more.
Right, it could be absorbed. I mean, if we were expecting a very sharp snapback in demand for condos, that could be absorbed, really in relatively short order. The challenge for pre-construction is that we need to absorb the existing condo inventory before developers see a demand for condos at a time when the price that they can offer their units is challenged because of high construction costs. And so on a per square foot basis, we see in the existing home market probably better offerings and then what some developers can offer. Obviously, there's a whole spectrum.
Yeah, sure.
But in generally, it makes them very hard to attract those new buyers into that market.
And look at the plummeting in new condo sales there. And these would largely be pre-built sales.
These are entirely pre-built.
Right. Yeah. Gosh. Just going. So you try to address in the report how long the recovery could take, and you say it could
that's the big question, right? And this is what our best attempt at trying to put a little bit of a timing on it. And our view is that if you make what we think are reasonable assumptions on the pace of sales, on pace of construction, at a time when housing starts have plummeted, so there's very little new units being added to the pipeline of construction, even though there's still some fairly large number of units under construction.
Yeah, I mean, you walk around the downtown, you see condos still going up.
Right, but eventually those will come out of the pipeline, right?
Yes.
And will hit the market. And so trying to make some assumptions around those variables, we think that we're probably looking at early next year, the middle of next year, for overall inventory to start to come down, and then demand eventually making its way back into a new development showroom. So that's we're looking at possibly another year or more of difficult situation. And again, the timing is very difficult to gauge it with a high degree of precision, but that's our sort of our best guess.
Is there a risk of a cascading drop in the market that small investors are forced to sell stuff they can't carry anymore, and that drags down prices further?
That is part of the risk on the supply side, right? On inventory. Now, we know there's a number of units under construction that have already been sold and that will be delivered.
Yeah.
And there are issues, and we're seeing news. I'm sure you're reporting on news of difficulties to close on some of those purchases that eventually will quite possibly end up in the pool of homes that are for sale. So those are part of the very complex equation that we're looking at.
But so-called investors, people who hope to buy them and rent them out and hope for a capital gain, were they a big part of the condo market? I know it's probably hard to quantify.
For new construction, they were the investors were the bulk of sales.
Not
for most projects.
Oh, not people who wanted to live there.
Well, when you think of the timelines, right, and often those condo projects will take 2, 3, 4, sometimes even more years before they are delivered to the market. No, there aren't that many people who are willing,
yeah, that's true.
That patient. Whereas for investors, they could put in a deposit and then eventually take possession of that unit and put it in the rental pool at that point.
In some cases, they just flipped it, didn't they, to somebody else before it was even built?
Some of it, yeah, some of it.
I guess every party has to come to an end eventually.
Well, when you look at the levels that the market was operating at just 3 or 4 years ago, it's not entirely surprising that we see a little bit of a payback. Now, the worrying question in our view is that the dearth of new sales that is turning into dearth of new starts, eventually will mean less supply down the road, possibly at a time when demand is picking up and when immigration will start to be a bit more renormalized at that point. So maybe in 2 or 3 or 4 years from now, we might be back in a tight situation again.
Robert, thanks very much.
It's been my pleasure.
Robert Hogue is Assistant Chief Economist at RBC.